This is Andy with QualityStocks. Today is Tuesday, May 18th, 2010. We're going to change gears and take a look at the New York Stock Exchange stock, American Oriental Bioengineering, trades under the ticker AOB. See that it dropped a hammer yesterday, indicative that the bulls and bears might have had quite a struggle, closed down a little bit, but I'm assuming that the buying pressure came back in and pulled this stock up towards the end of the day. See, this is a classic pincher play sort of setup. Pinch is coming into effect. You can see it's at -6 and 35 for the PPO and ADX respectively. A lot of times I like to see them deeper than that, but some stocks just don't ever really achieve super deep levels. I always say go back and look and see how it reacted historically to pinchers. So let's take a quick look at the last pinch it had around these same levels. Right in through there. See, since the pinch, the PPO trended north, the MACD trended also towards zero, and the stock did pretty well. 372 up to 492. There were some very nice gains. Since then, we always say, where do you take your gains? Well, when it breaks that 200-day, initially falls through the 20-day moving average or the 10-day moving average. I usually use the 10-day, but when it breaks back down through that 200-day, you should be looking to sell possibly and secure some gains. Came back down, held $4, and it fell through it recently. Just a lot of down days, you can see. I'm not sure if there was some bad news for a biotech or what happened there. MFIs in a classic bottoming position, looking to turn. Accumulation distribution made a little hook up yesterday based on that long hammer. That's what leads me to believe that there was some buying pressure towards the end of the day. Money flow also turned up. The CCI people use different ways. Some people use -100 as the buy point. When it breaks back through it, that's your buy point. People use it all different ways. I just use it as an overall general feeling for how the chart's doing. I also like to see it break through -100. And it's on its way there, so we'll see if it pulls through it. The full stow bottomed, turning again. Tricks, this is the separation that I talk about. The Tricks is a very smooth indicator. It doesn't tend to, make rocket snap turns. I look for large separations, trying to pull back together, indicative of turns. You can see it here. I expect it to be something along these lines. Is what I'd look for it to get the big separation, slowly turn, and curl back in. And that's what I like to see it do here. The faster it turns, the better. But it's a very smooth indicator. You can see the RSIs in classic bottom play formation, with all of them heading down very low. Even the 14 is only at just over 13. Classic sort of formation. Look for a bottom. This hammer is the kind of thing that makes you say, "Look at me." Obviously, this is where I think that the bulls came in, bought this back up. People saw it as a buying opportunity down here around 310. So what I look for from this point is, first and foremost, I want to see it hold that bottom. As if this doesn't want to go today, if it wants to slide back down some, I want to see it hold that bottom. Preferably, it'll make a turn off this, put a green candle together, put together some sort of reversal pattern, whether it's a morning star sort of look to it or what have you. And if it does, I want to see it hold this 328. You can see it's had 3 days where it's becoming a support level. If it makes that turn, I want to see it hold 328 if it tries to slide back down. With pinchers, you look for an initial bounce. This triangle up maybe test the middle Bollinger Band, the 20-day, which is up around 387. You look for that to come through first and test this. You want to see these short-term moving averages curl underneath the PPO. That's a pretty nice bounce. Not quite 20%. That's why this drop looks almost worse than it really is. It's from around $4.05. All the way down to the very bottom at 310. It looks like it really fell off a waterfall, and it's a dead cat kind of play or whatever. But realistically, it's only down about 25%. So you want to see this try and come back up now, and preferably challenge that 20-day. You look to secure some profits when it gets up near that sort of resistance. Because in that case, if it wants to slide back and make another move, then you look for another higher low. Always right here, we want to see it hold 328. If it wants to continue down, a buy point might be at 310. See if that new support level holds. Those are the kinds you look for when playing pincher plays and playing bottom plays and bouncers. Then you turn the bounce into some profits, and then you look forward as a more long-term turnaround. Do a quick DD and see what happened with bioengineering, and see what was behind this massive drop. Other than that, I'd play this chart 100% along the lines that I just discussed. This is Andy with QualityStocks taking a look at AOB.